Hello, I'm Catrina M. Craft, and you've just tuned into the Craft More Cash podcast, where finance meets innovation and strategy becomes reality. With over 2 decades navigating the twists and turns of accounting, tax, and business strategy, I've had the incredible opportunity to work with startups and Fortune 500 companies alike, crafting pathways for businesses to grow and thrive. I've tailored my expertise to serve the unique needs of industries ranging from real estate to creators to marketing and beyond. I'm on a mission to equip individuals with the financial savvy they need to succeed. Through my Wealth Intelligence course, I'm all about breaking down complex concepts into actionable strategies for business owners. Welcome to Craft More Cash. Let's make wealth building simple, fun, and effective. Ready to transform your financial journey?
Let's talk about travel deductions. Travel deductions are also deductible for business if they're ordinary and necessary business trips. And the type of deductions you can make would be hotel, your airfare to and from, and here 50% of meals, but 100% in 2021, ground transportation, and many others. There also, when you say many others, it could be expenses like your dry cleaning. You have to dry clean your suit or dry clean your dress or whatever, your clothing, then that is the many other. Also tips to the porters, and all of those types of expenses are also deductible. We also have Ubers, that's the ground transportation. If you're doing cabs, bus, subways, whatever is included when we talk about ground transportation here. Let's talk about a little bit of a strategy when we want to think about business trips. Some people ask me, well, can my family go with me and I deduct them on my business as a business expense? The answer is yes and no. I want to say no when your children and your spouse are not employees and a part of your business. But if they are employees of your business, then it becomes a trip for business with your employees. But you need to make sure that you're at least spending 4 hours of that day on business related activities. That could mean going to a new site. So if you're in some type of entertainment or you want to do an event and you want to visit a site like a location, then a scouting location. Also, what you need to do is have the business on a Friday. You need to spend 4 hours. If you stay on Saturday and Sunday, those are non-business days. So those are free days. You can do whatever you want and could still be deducted. Then on that Monday, you have some more business. So that gives you 4 days of business. Now, on the days that you're not conducting business, you cannot deduct the meals, but the hotel would still be deducted because you're not going to check out the hotel and then check back in. So that gives you the 4 days of hotel stay and the round trip airfare. So there are ways in business strategies and tax strategies where you can maximize those deductions. Also, I received a per diem. Is it taxable? This website gives you per diem highlights. It's going to give you some more information. The government has set rates of per diem amounts based on where you're traveling. So if you don't want to keep up with your receipts and all of your traveling, you can use the per diem rates here and deduct the per diem rates that the government has allowed. Now let's move to home office, the home office tax deduction. I know a lot of people are not officing in an office space, but now they are officing in their home office. If you have a home office, it is tax deducted. Please do not be afraid to take the home office deduction. I still hear people saying that if I take the home office, it's a red flag. It really is not a red flag, especially now. The IRS knows that a lot of people are working from home. Please take this deduction and do it the proper way. Keep up with the receipts the proper way. Let's talk about what you need to do. So the home office is allowed when these are the requirements. Principal place of business. You regularly and exclusively use for administrative or management activities. No other fixed location to perform these activities. So even though you may have an office, you could still have a home office if you are performing regularly and exclusively duties for administrative management activities. You're doing them in your home office. If you're meeting customers or clients at your home, also that allows you to have that home office. You store inventory or products in your home office. A home office space doesn't necessarily mean it has to be your office. It could be half of your garage, but that space needs to be exclusive for your space, your home office space. So you can't say, I'm storing inventory in here today, I'm gonna take it, and then I'm gonna move all the inventory out. I'm gonna still take it, but park my car there. It has to be a space that is really set and individualized to store inventory and products. And with that, I know I have clients that have products. They have done shelves, they've taken a picture, and I know that it is really an inventory storage place. So I do recommend for any home office, you are taking pictures and you're keeping all of your home office together so that you really understand, and the IRS can prove, and you can prove to the IRS that this storage is a home office space. Also, if you use a separate structure on your property exclusively, then there's also some home office tax deductions that you need to be aware of to follow to make sure you receive that. In the home office tax deduction, there's two different ways that you can claim the home office. You can have actual cost method deductions, or you can have simplified method. So starting in 2013, the simplified method was allowed. So the actual cost method deductions are allowed: the home insurance, security systems, utilities, internet, telephone, HOA dues, rent, real estate taxes, mortgages, and more. So when you use the actual cost method, you're going to take all of your deductions, you're going to add them up, and you're going to allocate the percentage based on your home office space. So if you're using 200 square foot office space and your total home is 1,000, then you're going to allocate that percentage, the 200 over 1,000. And that percentage, 20%, is going to be applied to all of these different types of expenses. And there's even more expenses that we have to talk about. Simplified method started in 2013. That means I don't want to keep track of any of these expenses. Instead, I just want the IRS to give me $5 for every square foot. So in the example above, I said 200 square foot. So in here, 200 times 5, you would get the 1,000, but it's capped at 1,500. So just remember that. Also, office can be up to 300 square feet. It relieves you of having to keep records and no carryover expenses. So the good thing about the actual method, if you don't have income to deduct the home office, because you have to have income, net income, in order to offset the home office, it rolls forward year after year until you have income in your business. If you use the simplified method, there's no carryover of expenses. That's why it is important to understand the both rules and see which one is going to be best for you. Selecting the right structure for your business. How should you operate and structure your business? It can be difficult. I know there's a lot of information, and it can be confusing if you're going to Google searching for answers or looking for a friend to give you some help. It really is important to lay everything on the table about your goals, your business, your income, your expenses. All of that is important in deciding what's the best business structure for you to operate. So consult with a CPA to really learn more about the filing and compliance issues, tax benefits, and the detriments of which way you need to file. Watch out for 2026. That's when Cinderella's carriage can turn into a pumpkin. What that means is when the act was passed at the end of 2017, it was impacted for 2018 to 2025. In 2026, everything that I just told you could go away. That's the hard part of trying to keep up with your own taxes, because the rules are always changing and new tax code is coming out, new rules, new explanations, and it is important to always just keep abreast of your own tax strategy. So let's continue and just talk about how the tax system works. We've talked about business. We talked about how some of the business structures, the income or losses flow to your individual tax return. So I want you to understand the individual side and how your businesses interact with your individual tax return. Now on the individual side, you're going to add up all your income again. You're going to subtract adjustments. So in the individual side, you may have adjustments, and those adjustments will get subtracted. You're going to subtract your standard or itemized deduction. You're going to consult the tax table with the tax brackets. Then you're going to subtract any tax credits. So there have been some child care credits. There have been some COVID, a lot of people call it COVID tax credits. So these are different credits that you would subtract. You're going to add additional taxes. So if you have any additional tax, then you're going to write a check. But we don't want you to write a check because we want to make sure that throughout the year, you know what your tax liability is, and you're paying, especially if you're a business, you're paying in quarterly. And if you do have to write a check, it's very low, because you don't want to get a big refund, because that's money that you have lost. You've had lost time value of money that you could have utilized for something else. Instead, you've allowed the IRS to use that money. And although you get a big refund, you could have used that money throughout the year for something else. So you really don't want to get a big refund, and you don't want to have to write a big check. That's why the tax planning is important. Itemized deductions. Some of the itemized deductions that have gone away, that's really impacted what you can do as itemized deduction. So sometimes it's not even worth your effort to add up your itemized deductions, because you have already gotten your standard deduction. So if your itemized deductions, depending on your filing status, will not exceed these numbers, it will not benefit you to even worry about keeping up with your itemized deductions. So if you know that you're way under, then I would say don't worry about it. Just try to keep track of it. But if you know that you are getting close to this number or will be over, it's very important to keep up with your itemized deductions. But some of the itemized deductions that have gone away: no more unreimbursed employee business expenses. This is why I'm advocating for business ownership. If you are an employee and you had business expenses, say you had a cell phone that your company didn't reimburse you for, you traveled and they didn't reimburse you for, you had subscriptions to professional journals and trade magazines. So you are really trying to stay abreast of what's happening in your industry, and you were paying for this out of your pocket, and you work for a company and they did not pay for this. No more work-related education. So you want to improve your skills. I advocate for business ownership, because the tax code has not eliminated any of these deductions if you are a business owner. If you're thinking about getting into business, it is good to start looking into a business. And if it's in the same industry that you're currently in, then some of these business expenses you can put to your to your business, especially things related to education. If you're in the same field, you can deduct in your business, subscription to the magazines, because now you have a business that's doing the same thing. And this is a way you can deduct these expenses because now you have a business. And before, you could deduct them on your individual return as unreimbursed employee expenses, but now that is gone. So also job search expenses, you used to could deduct that. Legal fees related to your job, passport fees for business trips. Of course, now, if you have a business, that's a deduction. Tools and supplies in your business, you can deduct this in your business, but not itemized. Purchase of travel, transportation, meals, gifts, local lodging, again, in your business is a deduction, but individually it is gone away. And work clothes, uniforms. And this is only if I'm talking about if you are a W-2 worker and trying to deduct these expenses that have not been deducted, have not been allowed as a reimbursement. I know a lot of companies may reimburse you for expenses, but these are for non-reimbursed expenses, and you can no longer deduct them on itemized. But if you have a business, that's the code is really, you know, leaning toward benefiting to business owners, these types of expenses would be a deduction. Where do I go from here? You can learn to grow your wealth and develop financial intelligence by joining. It's a 6-week wealth intelligence program. So it's 6 modules, and every week you have homework, you have things that you need to go over, and you have a Q&A with me every week. And you're going to develop your net worth. You're going to have budgeting. You're going to look at QuickBooks. We're going to look at your KPIs, like what do you need to track? We're going to make sure that we have a plan that you wanted. And then by the end of that 6 weeks, you're probably going to adjust that plan because you're going to feel so strong and feel like now you have the wealth intelligence to make different choices.